Welcome to our latest Lomres Lowdown, giving you a snapshot of how London's prime markets are performing right now. We are now a little clearer on when we'll be leaving the EU, but there's still uncertainty about the impact on the economy and housing market. In prime areas of London, activity has dropped, but deals are still being done. Interest rates are at a record low and buyers are beginning to return to the market at a price. For sales, our data shows that transactions did pick up in the third quarter compared to the second quarter, albeit off a low base. Over the last 3 months, prime central London saw a 17% increase in sales compared with the previous 3 months. However, comparing the third quarter with the same 3 months last year, transactions were 34% lower in prime central London, 37% down in prime London, and 42% lower in prime fringe. In prime central London, the third quarter saw a 6.1% fall in achieved prices compared with the same 3 months last year. The market over 5 million, which bears the most substantial stamp duty burden, continues to see the most significant falls in prices. A weaker sterling means overseas buyers are seeing the biggest savings in prime London. In October, the pound fell to a 5-year low against the euro and a 31-year low against the dollar. This means savings of more than 30% compared with peak values for those buying in dollars and 28% for those buying with euros. And onto the lettings market. The summer was, as usual, the busiest time for prime lettings. Our data shows that August and September were particularly busy months, with a 5% increase in properties let in prime central London and a 7% increase in prime London, compared with the same period last year. Rising stock levels, which were already starting to build in the second quarter, continued over the summer. With more choice, tenants have been more confident in negotiating on asking rents. Across our 3 prime areas, the Lomres Lettings Index recorded a fall in achieved rents of 5% compared with the previous 3 months, with rents having dropped by 4% since Q3 2015. Looking ahead, it's difficult to predict how the market will perform. The majority of our subscribers surveyed still expect rents in 2016 to end the year down on 2015. However, the proportion expecting a fall has dropped since our previous survey. For sales, it is buying costs rather than the impact of Brexit, which our agents expect will have the biggest impact on prices and transaction volumes in central London. 35% of agents expected prices to fall by more than 5% on 2015 levels within their local market by the year end. But expectations on demand from overseas buyers were more positive, with agents expecting overseas buyers will take advantage of lower prices and exchange rates over the next 12 months. With the autumn statement due on the 23rd of November, we will continue to keep a close eye on the market and keep you updated on the implications for the prime London property market. Thank you for watching.